ledger, subsidiary book, and trial balance. Okay, so this is a part of the accounting process. The recording is done in journal, the classification is done in ledger, and the summarizing part is done in trial balance. And in between, there is a subsidiary book. Subsidiary book include purchase book, sales book, purchase return book, sales return book, bills receivable book, bills payable book, journal proper. And cash book is also there. So what is a journal? Before starting, we'll know what is a journal. A journal is a book of prime entry. Okay, a journal is a book of prime entry or a book of original entry. First, any transaction, any entry is done in a book known as journal. Because all business transactions are to be recorded in the book is known as journal. Journal means a daily record. Daily you have to record day-to-day transaction. The format of journal is very important. Okay, is first there will be date, then there will be particulars, then there will be ledger folio. Yesterday I was telling ledger folio. Then after that there will be amount, debit and credit amount. Debit will be in form short form as DR, and credit will be in the short form as CR. What are the steps in journalizing? The steps in journalizing, it include that to take up the steps one by one, and to find out that there should be a classification of accounting. Accounts have been classified as personal, real, and nominal account. And personal, real, and nominal, their subclassification also has been done or not. And number 3 is that each class of transaction is debited credit. When you're putting in journal, you have 4th step. It's not given in any book. I'm telling on my own experience. First, you have to see from the question, identify the transaction. In this double entry system of bookkeeping or the financial accounting, we have 2 transactions always in any question. So find out 2 transactions or 3 transactions. Minimum there will be 2. Otherwise, it is not a double entry system of bookkeeping or financial accounting. So 2 transactions we will find out. Find out that the types of accounts. Second step is the types of account. Personal account, real account, or nominal account. Step 3 is which is debit and which is credit. Step 3. Step 4 is post the journal entry. Okay, this is the 4th step. Again, I am repeating. First, identify the transaction. Second, identify the nature of account. Third, identify the debit or credit aspect. 4th, post the journal entry. This is the 4th step of journalizing. The process of making a journal entry in the books of account is known as journalizing. The process of making journal entry in the books of account is known as journalizing. There will be transaction of different type. Example, I am giving an example. There will be the year. There will be date also. Okay, month also. And like example, I am giving bought good for cash or rupees 30,000. This is a question. Bought goods for cash or rupees 30,000. This is a question. Bought goods for cash means bought goods for cash means purchase goods for cash. So we don't have any goods account in accounts, financial accounting, because goods maybe you are purchasing or you are selling. Suppose in the place of bought, it will be sold goods on cash. So the account will be we are selling that. So goods account is silent in financial accounting. We will classify the goods account in purchase or sell. Bought means purchase. The purchase goods with cash. So there are 2 aspects of the entry. One is purchase, another is cash. Step 2 is classify the nature of account. Purchase is a nominal account. Cash is a real account. Step 3rd is purchase should be debited because it is nominal account means it is expenses. When you are purchasing means it is your spending money on that. It is an expenses. And when you are making expenses, your cash is going out from the business. So cash will be credited. 4 is putting the journal entry. Purchase account debited to cash. Okay. There may be return of goods also. Okay, return of goods. Return of goods take place when you are purchasing, and during the purchase there may be some defective goods. So you have to return the goods to the supplier. About 50,000 goods are purchased. Out of that, 3,000 goods are defective. So the goods purchase is 47,000. You return 3,000 goods to them. For that also you have to make journal entry, opposite journal entry. When you are purchasing, it is purchased to cash. When you are returning, it is opposite, cash to purchase, but you have to put the name of the person to whom you are returning. Apart from the cash, you put the name of the person to whom you are returning. Suppose Ram Enterprises to purchase, you are returning to purchase return. So Ram Enterprises account debited to purchase return. Opposite of that. When you are selling, sell or sold goods of rupees 20,000, suppose you are getting cash. Okay, two transactions are there. One is cash, another is sale. Step 2, cash is real account, sale is a nominal account. Step 3, cash we are getting, debit what comes in real account. Cash is a real account, already I have told in step 2. Cash what comes in, cash is debited. One is debited means automatic, another is credited. The cash account debited to sell. When you're returning sales return, opposite. Okay, change the name of the sales return, cash. Apart from the cash, put enterprise, sales return account debited to Sam Enterprises, suppose. When there is a concept of asset, okay, when there is a concept of asset, maybe purchase of asset or sale of asset. Here, in case of asset, the purchase and sales remain silent. Understand this statement. In case of goods, the purchase and sale is applicable. Goods remain silent. In case of asset, the purchase and sale remain silent. The asset comes into picture. Suppose you are selling furniture. The furniture name will come. You are purchasing TV. TV will come. Okay. So purchase and sale is silent in case of asset. It is only applicable in case of goods. Paid salary. You have to identify two transactions. Paid salary of rupees 10,000. Two transactions are, one is salary, another is cash. This is step 1. Step 2, salary is a nominal account and cash is a real account. Step 3, salary nominal account is an expenses, it will be debited. Cash is a real account, but goes out, it will be credited. Step 4, salary account debited to cash 10,000, 10,000. So we need this step 4. Those who will find difficulty, they can go in rough or they can go in their own mind, step 1, 2, 3. You don't have to do step 1, 2, 3, 4. We need the step 4 only in the answer in the examination. So the step 4 you have to do. I am giving this step 1, 2, 3 for easy understanding and process. Nowhere in the book it is written. So that there will be no problem in getting the step 4 and there will be no wrong in this procedure. Because if you are correct with which is a personal account, which is a real account, which is a nominal account, and if you remember the golden rule, the traditional rule of accounting, double entry system accounting, that is the personal account, debit, receiver, credit, giver, real account, debit what comes in, credit what goes out, nominal account, debit, expenses, losses, credit, income, gain. That you remember, then everything will be done. Transaction of the proprietor, another aspect, very, very important. The transaction of the proprietor is that when you have their own shop, when you have own shop and you are withdrawing goods or money or asset, 3 things are there. Withdrawing goods from the shop, you have a hotel, you are taking the daily, in the night you are taking a dinner from your hotel. You have hotel, you are daily taking 500 rupees and spending useless, unnecessary thing, personal expenses. You have a hotel, you are using the hotel vehicle for your personal purpose. That should be accounted. Accounting rules and regulation, the general accepted accounting principle tells us any transaction with the business, because business and owner are 2 separate persons. Maybe I am the owner of the business. Okay, suppose BCOC Enterprises, the owner of the business is BCOC Enterprises myself. I have invested money in that, but still, enterprises and business are 2 separate things in accounts, because you are maintaining accounts of BCOC Enterprises, not of BCOC. So for this, we have to, it's a notional entry, but we have to make recording of drawings of cash, goods, or asset. This is the transaction with the proprietor, but many of them don't do. Those who don't do, they suffer huge losses. And that is one of the important inherent limitation. The business go bankruptcy. Another thing is discount. When business will give discount, there are two sides. One is when you purchase large quantity, it will give a trade discount. Another, when we are purchasing within a short period of time, within the specific time, and we're giving you have been given a cash discount. Okay, so both discount are to be reflected in the accounts. Bad debt. What is bad debt? The amount which is owed. Suppose I have taken 5,000 rupees from a business concern. I think taken some things, purchased some things. Out of 5,000, I have given 4,000 rupees. 1,000 rupees I have not given. I am not giving also. This 1,000 rupees is bad debt. Suppose out of 5,000 rupees credit, I have not given total at all. 1 rupees I have not given. I have told that after 2 months I will give to you, but 1 rupees I have not got given. I have left the total country. So 5,000 is total bad debt. Bad debt. Debt means you are taking goods on credit. I am debtor. I am taking goods on credit. Who is giving? He is the person known as a creditor. So if it is, I am unable to pay, that is known as bad. If I am paying it, that is known as good debt. There is some practical entry you do in the. I am following a study material. There is some compound journal entry. Compound journal entry means there will be more than 2 journal entry. We are discussing till now. We have discussed only 2 journal entry, but now it will be more than 2 journal entry. There will be 3 journal entry. Means 2 will be debited or 1 will be credited, or 1 will be debited, 2 will be credited. Okay, so this may occur. Suppose you have taken goods of 1,000 rupees. 200 is the discount. The cost of the goods is 1,000, but he is given discount of 200. You have to pay 800. So purchase account debited 1,000 rupees. To cash you paid 800. To discount you paid 200. Okay. So these are known as compound journal entry. Opening entry. When you are starting a business, okay, when a new accounting year begins, the previous year balance comes forward to this new year. Okay. So the previous year account balance brought forward to this new books of account. This is done by means of a journal entry known as journal entry, known as opening journal entry or opening entry. The entry may be you may have brought cash of last year or last month. You may have bought furniture. You may have bought stock. Okay. So that all will be debited to any capital or to any bank loan, to any creditor. Okay. In that opening entry, the same format of journal will be applied. You put all the debit, you put all the credit, the balance will be with 2 capital account. Okay. You put all debit. Debit may be cash, maybe furniture, maybe asset, maybe stock, maybe etc. Okay. 2 capital loan, 2 creditors, and the balance will be 2 capital balance. Okay. Casting and carry forward. This is also very important. Casting and carry forward. What is casting? Casting means you are casting an entry. Okay, like you are casting into any role, or a casting an entry. You are putting an entry. Journal is totally periodically done, either daily or on weekly, depending upon the volume of transaction in the business. Totaling is called casting. You are making the total debit. How much is the debit and how much is the credit? You know, asset is equal to liability plus capital. Okay, the double entry system bookkeeping tells us the dual aspect principle. So total of debit will be total of credit. If the total of debit and total of credit is not tallying, okay, then there is some difficulties there. Some wrong have done. Carry forward. Some of the balances are carried forward to the next month, or some of the balances are carried forward to the next year. Okay, carry forward and brought down. Brought down means that it may be of the last year you are bringing down to this month. Carry forward means you are taking that, like the opening entry, you are taking the last year closing balance to this year opening balance. You are carry forwarding. Taking the same thing into a new year, into a new month, etc. Ledger. After the journal, when you're putting the journal, there is no classification. You will put real account, you will put personal account, you will put nominal account, you will put any account. Okay, but debt wise. But in case of ledger, you will open separate account for each of them. For purchase, you will open a separate account. For sales, you will open a separate account. For asset, you will open a separate account. For furniture, you will open a separate account. For loan, you will open a separate account. For cash, you will open a separate account. For this creditor, you will open a separate account. For building, you will open a separate account. For each of the transaction which is debited or credited in journal, after making the journal, you will make the total of the debit and total of the credit. You will see whether it's tallying or not. If it is tallied, then it is correct. But there may be some mistake apart from the whether both are tallying, both debit and credit. There may be some mistake also. After that, you will count the number of accounts once, not repeated. Suppose purchase are 2 times, but you take one account will be open. So you open purchase return, you open sale, you open sales returns, the nominal account, nominal account like salary, wages, capital, loan, creditor, etc. Okay. So like this, suppose the journal is for 1 month, or there may be 30-40 ledger account. So in that particular ledger, it is two part of a journal. One part of the journal is that you are putting date, particulars, LF amount. Okay, but in ledger you will put date, particulars, JF amount. JF means journal page. So from the journal you are taking that into ledger. So the page number of that will be put in that. On the debit side, and on the credit side also same thing you will put. Okay. So it will be two part of the journal. You're putting journal one side, but in ledger it will be two part of the journal. Two journal will be there that will constitute a ledger, because both the side of the transaction will be recorded separately. In journal you are putting debit credit, but here you don't put debit credit. In the heading you will put debit credit. On the left side of an account is debit. On the right side of an account is known as credit. Only you have to put to or by. On the left side it is to, on the right side it is by. Ledger is the classification and summarized record of business transaction relating to all personal, nominal, and real account. Okay. Form of ledger I have told every journal entry will be posted in ledger. Every journal amount will be posted in ledger, the same amount. And the page number of the journal which is written as ledger folio will be written in the ledger as journal folio. And posting on the debit side of an account, the particular column will add the name of the account which is credited in the journal, and add the word to before the name of the party. Suppose to Ram. Compound journal entry also same thing. Suppose there are 3 journal entry: purchase account debited 1000, to cash 800, to discount 200. So you have to open 3 journal ledger account: 1 purchase, 1 cash, 1 discount. The ledger account balancing is very important thing. You have to balance the ledger account also. Balancing of ledger account means suppose the total of the debit is made, the total of the credit will be made. First by the total of the debit. So the total of the debit is 10,000 and total of the credit it is 8,000. So it will be by balance carried out 2,000. And that will be it will be on the end of the month. Okay. Suppose March 31st, it will be March 31st. February 28th, then it will be February 28th. June 30, then it will be June 30. And that will be carried forward to the opening balance of the next month. Suppose it is ending as March 31st, it will go to by balance carried out March 31st, is an amount will be written. The same thing will be coming forward to the April 1st to balance brought down. Okay. It is totally a practical aspect. You have to practice in your home, whatever I am telling. What is the significance of balance? The significance of balance. There are personal account, there are real account, there are nominal account. Personal account are more frequently balanced as compared to other. Okay, balance is personal account whether the party concerned owners to the business or other way. The party have to give to the business, or business to businesses to give to the party. Okay, vice versa. Business to receive or business to pay. In case of real account, that normally balance at the end of the accounting period, normally for the purpose of preparing the final accounts. See, I'm giving a very simple thing. When you prepare trading profit loss account balance sheet, in balance sheet, 2 accounts will be coming. What are the 2 accounts will be coming? Balance sheet you will get personal and real account. You will not find any nominal account in balance sheet. Remember this. This is very, very important. Okay. In balance sheet, you will not get any nominal account. In balance sheet, you will get only personal and real account. But in case of trading and profit loss account, you will not get a real and nominal account. You will not get real and personal account. You will get only nominal account in trading and profit loss account. This you have to remember, so that when you are posting an entry, you will be very clear. The SAR is told that in balance sheet only personal and real account will be posted. Suppose RAM account is there, but you posted in trading account. So RAM account will not be posted in trading account because RAM account is a personal account. Personal account will be posted only in balance sheet. Real account, furniture will be posted in only in balance sheet. Furniture account cannot be posted in trading profit account. Salary account is a nominal account. So nominal account will be posted only in trading profit account. Nominal account cannot be posted in balance sheet. Nominal account are not usually balanced, but they're checked by transfer to profit loss account at the time of preparing the final account. Okay. Posting of opening entry. Opening entry posting is very, very important. I have already told, put all the entry like cash account, stock account, furniture account, Premchand account, okay, Ramlal account, whatever name may be, to creditors, okay, to loan, okay, to outstanding expenses, to the balance will be capital. And how much is the number of account? That much you have to post the ledger account. This is about the journal and ledger. Then we will go to now subsidiary book. What is subsidiary book? Apart from journal and ledger, there also book. Journal is a book of prime entry. Ledger is a book of secondary entry. Okay. The first entry book is journal. Second book is ledger. Apart from that, there are also small books which are to be maintained in the books of account or the record to be maintained by the organization while preparing the accounts. What are they? Number one is cash book. Okay, and they are known as subsidiary. The subsidiary book includes number one cash book. Okay, number two petty cash book, a small cash book which is maintained for day-to-day expenses like tea, snacks, etc. Number three is your purchase journal. Okay, purchase return journal. Number four. Number five, sales journal or book. Number six, sales return journal or book. Number seven is your bills receivable. Number eight, bills payable, and number nine is journal proper. From number 1 to 8, which we are not getting posted anywhere else. Okay. Apart from journal ledger, there are 9 books in subsidiary book. And 1 to 8, apart from the journal proper. 1 to 8 which are not getting posted. अगर 1 to 8 में अगर कुछ उसमें पोस्टिंग नहीं हुआ है, अगर कुछ बच गया है, तो जर्नल प्रॉपर में जाएगा नंबर 9 में. जर्नल प्रॉपर में क्या होगा? Any credit purchase of asset, because all these are dealing with goods and money. Any credit purchase of asset and other thing we'll discuss, that will go in journal proper. So there are cash book. Cash book are two types, 3 types. One is single column cash book. Okay, only one column will be there. Okay, like ledger, on the left side also will be there, on the right side also will be there. Like particulars, date particulars, cash column, that is amount column. Okay. Here also that particular right hand side, that particulars, amount column. And the page number will be there if you put. But in case of double column cash book, it will be cash and discount. Sorry, it will be cash and it will be bank, I think. It will be cash and bank. There may be some cash transaction, there may be some bank transaction. In case of triple column cash book, there will be cash, bank, and discount. On the left hand side, particulars, date particulars, cash, bank, discount. On the right hand side, date particulars, cash, bank, and discount. Why there is division of journal? Why this subsidiary book started? This subsidiary book started because one journal cannot handle each and every transaction to be recorded in one place. Division of ledger was there, but it is too lengthy process. Apart from that, there are some books which are recorded to be separately, which is of prime importance in day-to-day activities for the accountant and for the auditor to verify separately. For that, the journal becomes bulky and voluminous, and for this, the transaction may not be recorded quickly. Maintaining the separate books of account will help you easily to maintain accounts and also to do the audit. Cash book, it is record only cash, receipt and cash payment. Purchase journal, what does it leak? Purchase journal is recording credit purchase of goods only. Remember, credit purchase of goods only. All cash will be going to cash book. Only credit purchase will be going to credit purchase book or purchase journal. Any return to that will be go to purchase return journal. Sales, only credit sale. Cash sale will go to cash book. Any return to that will go to sales return journal. Bills receivable book means you are having recording the bills from the debtor or receiving the bills from the debtor. Bills payable, you are paying the bills to the creditor. And journal paper, it is used for recording transactions which are not covered in from book 1 to book 8. Book 1 to book 8 means from purchase, cash book, purchase return journal, sales return journal, bills receivable, and bills payable. Okay. And journal paper include credit purchase of asset, opening entry, rectifying entry, etc. Okay. What are the advantages of subsidiary book? This is a theoretical aspect. The advantages of subsidiary book, there will be classification of transaction which becomes automatically goes on, and the reference become easily. You can find out easily, and there is quick division of work. Okay, prompt division of work, and there are more details idea, more detailed history, more minute description of the items of each of the transaction. Responsibility can be fixed. Who is responsible? Who is not responsible? Because here the different types of books will be maintained by different person, and it will help in checking also. Cash book, I have already told, single column cash book, double column cash book, and triple column cash book. Single column cash book, on the left hand side date, particulars, LF amount, and the right hand side date, particulars, LF amount. Okay. Like ledger, you have to prepare that. In case of double column cash book, sorry, I told a little bit wrong information. In double column cash book, it is date particular, cash and discount. It is not cash and bank. In triple column cash book, it is cash, discount, and bank. I was thinking that maybe some different, because in double column cash book, it is because that is cash means that discount will be there. Okay. In double column cash book, there will be date particulars, LF, discount, and cash. On the left hand side. On the right hand side also same thing, date particulars, LF, cash, and discount. In triple column cash book, there will be cash, discount, and bank on the left hand side. On the right hand side, in triple column cash book, also cash, discount, and bank. Petty cash book. This is a very small cash book because when making expenditure of 10 rupees, 5 rupees, 2 rupees, 20 rupees, but that should not be recorded in the cash book. For that, a separate small cash book is initiated or started. That is known as petty cash book. Okay, for day-to-day expenses, for tea, postage, telegram, stationery, cartage, conveyance, entertaining the customer, minor repair, snacks, etc. So that will be that system is known as impress system. What is the impress system? Suppose you have been given 1,000 rupees, and after 1 month you have seen that you have spent 800 rupees. So more 200 rupees is left with you. Okay. Again, they will not give 1,000 rupees. They will give you 800 rupees more. This is known as impress system. The amount of money that is given to you and the amount of expenditure has been made by you, they'll minus it, and the amount of money that is left would carry forward the next month or the next year. The left balance which is given to you, the same balance will be given to you. Okay, the left balance with 800. 200 is left, so the 200 will be with you. They carry forward to the next month or the next year, and the balance that is to be given in the beginning they get 1,000. The balance to be given is 800. So only 800 they will give to you, or they will not give 1,000 rupees. This is known as interest system. The format is little bit different. In case of petty cash book, I am telling it will be receipt, then cash book folio number, then date, then particulars, voucher number, payment, printing, postage, cartage, conveyance, any expenses you can put, and then the total column. You see, there are bank account. There are 4 types of normally bank account. One is saving, one is recurring, one is fixed, another is your current account. Saving bank account is opened by the respective person on a personal basis. The current account is opened by the business. A fixed account is open for a long period of time, and a larger amount. And recurring deposit open to get better interest for a medium term period. The bank, if you open account, you have the pay slip, you have to write and you have to deposit the money. And after opening the account, bank will give a passbook to you. The same passbook bank has with him in your name, that is known as cash book. So the amount of transaction in your passbook, the amount of transaction in the bank cash book should tally each other. How many types of check are there? One is crossing of check. On the left hand side of the two transfer parallel line will be drawn on the left hand side of the top corner. and will return account pay, so that anybody found the check, if it is in the road or anywhere else, cannot take the money. If you write in the check pay self and put the amount, anybody finding the check in the road will take the money and will deposit the money in his or her account. Nobody can tell anything. Okay, if you write in the top corner, left hand side of the top corner, not negotiable, means it cannot be transferred to anyone. You would write the name of the bank, suppose SBI, means only it will go to SBI, it cannot go to Bank of India. If you write account pay only, it will go to the specific account of the person to whom you have mentioned. If you write and company, it will go to the company to whom you want to pay. So this is the benefit of crossing, that no other person can take unauthorized usage or misleading of the check or money. Endorsement and dishonor of check, you know, the validity was 6 months. After that, if you present the check, it will be dishonored. The check will bounce. If you are giving a check and you don't have any money, you can give a check if you doesn't have money in the account also. Suppose you don't have money in the account, you have 500 rupees, but you have to make your payment of 50,000 rupees. So you give a check of 50,000 rupees. That, but you have given the date of this is the month of July. You have given the date of September, but till September also you have not deposited the money of 50,000 in your account. So on September 1, they deposited the check. Okay, before on September 1, the bank will credit the amount of money to the person. On September, you do not have money, so it will bounce back. Okay, and there is also rules that you will also giving fine. But within September 1, if you deposit, then you can also give the payment of credit to the person. Endorsement is there. Suppose if A has taken money from B and C want to pay to A, but A wants A, or A tells C to endorse to B. See, if A has taken money from A has taken money from B, and C also has to return the money, some money to A, but A has told to C, give an instruction to C to endorse the same amount money to B. Multiple column cash book, it will discount cash and bank. First will be discount date, particulars, left discount cash and then bank. Purchase journal, okay, the format I am telling to you. Purchase journal, purchase book, whatever you may tell, but it only record credit purchase. The quantity or the format is quantity, particulars, rate per unit, and total. Suppose quantity, suppose 10 furniture you have purchased. Particulars means which shop you have purchased and what is the furniture you purchased. Okay, you have to write. Rate means per piece how much, and total into 10 you will do, and total this much. And in the above it will be written the name of the name of the store, and the place name, the phone number, the proper address, the team name or GST number, etc., etc. Same is the format of purchase returns and sales return and sales journal, and same is the format of bills receivable and bills payable. Purchase return means whatever you have purchased, that same thing you can return. The thing which you have not purchased, you cannot be returning. You cannot return. Sales journal means the things which you have sold, the same thing that person can return that. Other thing cannot, they can return. They cannot tell that you have, this thing is wrong, because which you have not sold, they cannot be returning that. A credit note is used when when customer return goods. A statement called credit note is sent to him. Mark this sentence. Very short question. What is a credit note? A credit, when a customer return goods, a statement called credit note is sent to him. Remember, when a customer return goods, a statement called credit note is sent to him. The opposite is of debit note. Okay, when a customer buys goods and they found defective, then a statement is issued to him that is known as debit. Journal proper, see, there are 6 entries to be recorded. Apart from that, I will told it is recording credit purchase of asset. One is opening entry, another is closing entry, another is transfer entry, another is adjustment entry, another is rectification entry, another is miscellaneous entry. What is opening entry? I have already told. Any opening transaction will be recorded, that is known as opening entry. last month, last year, that will be carry forward and put in this year, current year or current month. That's opening entry. Closing entry, it is a part of that because last month or last year closing entry with this month or this year opening entry. Transfer entry. Suppose you want to give some, you want to transfer money from one person to another. You want to transfer goods from one place to another. Then you have to put the transfer entry. Suppose goods will be transferred from place A to place B. So goods in place A account debited to goods in place B account. So it will be transferred from A to B. Then adjustment entry. There are some adjustment entry to be made because there may be different types of transaction for which the adjustment are done. Okay. For adjustment entry, example is depreciation on fixed asset. Suppose you purchase an asset in 2020 and the asset will be after 5 years, 2025, it will be the life period of the asset is 5 years. After 2025, again you have to purchase another asset. So what for that you have to do, you have to adjust some entry, you have to make provision. Okay, you have to keep some reserve. From the profit, you have to set aside some provision. From the profit, you have to set aside some reserve. So that after 2005, you should have such amount of money for which you can purchase an asset after that. Because you know the validity of the asset is that. You have to adjust some entry because at the time of preparing the final account, it is necessary to bring into books of accounts certain unrecorded items. That will be adjusted. Like closing stock, you have forgotten closing stock, you have forgotten depreciation on fixed asset, you have forgotten interest on capital, which is also a notional entry, but that also should be recorded. Expenses incurred but not yet paid, income earned but not yet received. This entry are known as adjustment entry. That will be adjusted. The entry which you have left will be recorded when you get and will be adjusted. And that entry will be known as adjustment entry. Rectification entry, any wrong you have done. Suppose your RAM account should be debited, but you have to credit it. So you have to pass it again. Okay. A wrong entry has been made. If suppose it is a correct entry, then okay. If it's wrong entry has been debited, that will be, you make credit, then it will be done corrected. So rectifying entry is very important. Any wrong you do in accounts, there is no possibility of cutting it. In exam also, you don't cut. You put a rectifying entry. Suppose debit has been credited, credit has been debited. You push you pass a reverse entry. Like the debit into credit and credit into debit. It will nullify. Miscellaneous entry, what are the miscellaneous entry? Credit purchase of fixed assets, credit purchase of investment, withdrawal of goods from business, drawings, okay, withdrawal of goods, withdraw money from business, withdrawal of asset from business, special allowance, endorsement, any bad debt writing off, that are all miscellaneous entry. This is about a subsidiary book, and we'll go to the last unit. It is 3 unit, block 2. The last unit is trial balance. Trial balance is not an account, it is a statement. Trial balance is not an account, it is a statement. Of what? Of debit and credit. It is a statement of assets and liability. When trial balance concept arises, after journal, ledger, and subsidiary book, trial balance arises. It is a very interlinking link between preparation of financial statement. How can you prepare financial statement? The balances and the accounts which are shown in the trial balance. Because trial balance is a statement which shows the list of accounts having debit and credit. The accounts which are showing debit and credit are posted into trading and profit loss account and balance sheet. Okay, where you get the balance, where you get the accounts, where you get the transaction. The accounts which are shown in trial balance or debit or credit will be posted in trading profit loss account balance sheet. And where this trial balance comes from ledger, from journal, ledger, subsidiary book. Preparation trial balance is very, very important thing, you know. Okay, in preparing trial balance, there are some error which occur. The preparing trial balance, the error which occur, that should also be taken care of. That it's very, very important to find out the error which are getting affected by trial balance in preparation of trial balance and which are not getting affected in preparation of trial balance. This is a very, very important question, theory question. There are some errors which are getting affected by preparation of trial balance and some which are not getting affected by preparation of trial balance. What are these errors? That also we will be studying. So there are two methods in trial balance: total method and balance method. Total method will find the total of the debit and total of the credit. Balance method means, I'm giving an example. In debit, you write purchase account, suppose, okay, 50,000, and you credit of the same, you write purchase return, and credit is 10,000. When you balance it, the balance method tells us you don't put the two balance on two sides, debit and credit. You make the balance as one. So credit is 10,000 and it is 30,000 or 40,000. You deduct. So put on the debit side 40,000 minus 10,000 and 30,000. So make into as one account. Don't put both accounts. So that is known as balance method. But in case of total method, make the total of debit and total of the credit. A suspense account is also there. When the suspense account arises, when you are making the trial balance debit and credit, the trial balance does not match. The debit of total of debit and total of credit that does not match. Then you open an account that is known as a suspense account. That any discrepancy, suppose debit is 1 lakh and credit is 90,000, so put the 10,000 in the trial balance on the credit side and name the particulars. In the particulars, put the name as suspense account. And you search for journal, ledger, and subsidiary book. Again, you search and find out where the 10,000 is. After you get the 10,000, and you can remove the 10,000 of suspense. Otherwise, the suspense account of 10,000 will carry forward, and you will prepare trading profit loss account and balance it. There may be one-sided error, there may be two-sided error. One-sided means on one only debit is affected or credit is affected. Two-sided means both debit is affected and credit is affected. Okay. The rectifying entries was very important. Suppose your cash sales from RAM has been posted to cash sales to SAM. So suppose the cash sales to RAM means cash account debited to sell, cash account debited to suppose cash sale is that, so it is the name of the person will not be there. Cash account debited to sell. Okay. Credit sale to RAM. Then the name of the person arises. RAM account debited to sell. But by mistake you put the name of the, in place of RAM you put the name of SAM. The RAM account debited to SAM is the correct entry. The wrong entry you have put SAM account debited to sell. What to do? We should have done RAM to sell, but we have done SAM to sell. So sale account is correct in both the correct and wrong entry. Okay, so RAM account will be debited, and we have run the wrong entry, that is SAM account has been debited, to make the SAM account is credit. So RAM account debited to SAM account, you do the same amount, then automatically both the correct entry and wrong entry will go, and the rectifying entry will solve the matter. The limitation of trial balance is that it does not disclose all types of error. Sometimes, if you make the total of the trial balance also, it may tell you, but there may be some mistake. A trial balance does not provide additional information. No additional information is provided trial balance. But it is a reasonable proof. Some advantage is there. It is a reasonable proof that arithmetical accuracy of the book's account is found in the trial balance. The total of calculation will be done correctly in the trial balance. You'll get. There is any difference, you'll find out the difference. And it contains the balance of all the ledger account. Whatever the ledger account balance that is there, you have to pick up the ledger account balance and have to put in trial balance only. Nothing else. And it is a basis of preparing final account, I've already told. From this trial balance, you will prepare trading profit loss account and balance sheet. Okay. Regular preparation trial balance will help the accounting staff to understand, to know the accounts and its validity, reliability also, and authenticity. What are some causes for disagreement of trial balance, that also will study. The causes for disagreement of trial balance. There may be some omission of posting in one account. You might have left posting in some account. There may be double posting. The same thing you have posted 2 times. So for this the trial balance is not agreeing. Posting on the wrong side. It may be on the debit side, but you posted on the credit side. Posting wrong amount. Okay. Instead of 65, you have put in 56. Making the wrong total of the subsidiary book. Then the subsidiary book's total is wrong. Then the trial balance total will be wrong. Omitting to post the total of subsidiary book. You have left making the total of the subsidiary book. You have not posted that. Wrong totaling of balance of an account. The total balance of an account, you have made the wrong totaling. Omission of one account from trial balance. The 2 accounts should be there. Suppose purchase account is there, but you are not showing the sale account. Both purchase and sale account will be there from any organization. When you are purchasing means you have to sell, you have to sell something. Location of error in discrete trial is very important. You have to find from journal again, then again ledger, then you have to find out, then you have to go to subsidiary book, then you have to find out the error if any error is there. Otherwise, you cannot find error in the trial balance. Trial balance is a very important component because it will help in preparation of final account. So knowing the trial balance and preparing the trial balance in a perfect way is the duty of the accountant. And also, as a common student, you should know how to prepare the trial balance from accounts like from journal and ledger. Because if you are making mistake in journal, then there will be mistake in ledger. If there will be mistake in ledger, there will be mistake in subsidiary book. If there is a mistake, any mistake in any of the three book, then there will be obviously a mistake in trial balance. And from beginning, you have to do again. You have to find out again. This is very, very important that you have to do very casual, no casually, or very cautiously. You have to find out and do the thing. There are some errors which are not disclosed by trial balance. What are the errors which are not disclosed by trial balance? Number one is error of principle. What does the error of principle tell us? Means some capital items is shown in revenue items and some revenue items is shown in capital item. Capital item means suppose furniture is shown in trading account and salary is shown in furniture account. If the amount is same, suppose furniture 30,000 and salary is 30,000, the amount is same. So sometimes that also they get misleaded and the error will not be shown in the trial balance. Error omission, you have totally misleaded, not put in any journal entry also from beginning. The trial balance is not not showing the error. Or you have taken the debit side, you have not posted the credit side. The trial balance is not showing the error. Error of commission. Commission means wrong amount, wrong side, wrong posting, wrong casting, wrong person name. From Ram, you have become Rama, it should be. Okay. Compensating error means your error should be compensated by such a way the accounts of one person, suppose one account is more higher than 20,000, so by debited. So you credit that another person, the same person, in a different way by 20,000. तो डेबिट ज्यादा है 20,000 तो उसको क्रेडिट करने से 20,000 तो डेबिट में नॉर्मल हो गया. So that way also you can compensate. Rectification error is very important because आजकल बोलते हैं अगर एग्जाम में अगर गलती हो जा रहा है तो you don't cross it in journal entry. You put a rectifying entry. Suppose purchase to sell होना चाहिए था, आपका cash to purchase हो गया, तो you opposite make an opposite of that, the double amount. The rectification entry and trial balance is also a practical aspect. Different types of questions are also given in our books. That also you have to go through. Okay. Two-sided error, one-sided error I've already discussed. Journal entry you have to put in case of rectification entry. And I'm telling in case of rectification entry that also 3 steps. That is not given in the book. In many books not given, but in the simple 3 steps like the journal I have told. First, the correct entry you put. That should have been posted but not posted. Second, the entry which is wrong but have been posted. Third, the rectifying entry, taking the correct and wrong entry. Okay, you have to put the third entry only, but first and second you have to do in rough. Okay, and the suspense account, if there is there, you can have to put the suspense account. And the rectification of suspense account is also there. You have to put. If there is a suspense account, means there is some wrong in journal, ledger, or subsidiary book. You will get the indication. Okay. I think majority of the thing I have discussed. We'll take up some question. I think 10 minutes left. Any question you can tell? Ask. This needs to be practiced in your home with the question, and you can ask me if you have any doubt also. Okay, any doubt you can ask me regarding this question, regarding the trial balance, regarding suspense account. I'll give my number if you can ask me. so that don't have any problem, because this is a practical thing. Very difficult to get of this. Unless you study and practice, you cannot find out. Okay. So practice it regularly. Any doubt you can ask me. Because if you don't practice, it will be very difficult for you to get good mark. Regularly practice it, so that it will be easy for you to get it. Any doubt you can tell me. 5 to 10 minutes. This sir class already.
ओके सर ओके ठीक अच्छे सर कौशिक सर कहीं फोन उठो ना दी
अरे
फिर फोन कॉल स्विच ऑफ देखा कॉल कॉल रे
अजी तो मां को देह खराब थला खाली कहउतरे
तंग या पूरे क्लास अछि
मां दे मां को देह खराब था सर कहउतले परदिन कोन हेच केनी
अच्छा हो हो
अच्छा पचा दोछु ओके सर थैंक यू सर थैंक यू